What's going on, everybody, and welcome to the video. In this one, we're talking about AMC again. There's a lot of speculation going on with utilization rate and things. We've also got some pretty big news that's happening with AMC just as a company, and a lot that I believe is important for you to know, especially if you do own AMC stock. That's the point of me in this channel, is to provide all the information that I can to keep you updated on your stocks and different things like that. But if you do enjoy this type of content, all I ask is you subscribe to the channel and you turn on post notifications so you do not miss out on any of my future videos. But let's go ahead and get straight into it. So AMC today is currently trading for $4.01, trying to break that $5 level. That would be pretty big in my personal opinion for AMC, just kind of as like a psychological factor for a lot of people. I think that it could affect, and I know that there's the AMC ape army and different things like that, but for other people who could be joining this, $5 is just kind of a big psychological break. Looking on some key factors on the R side, we are pretty oversold, right now at 29.93, so we are oversold. And the MACD momentum hasn't been the greatest over the past month, but it does seem like we might be making a turnaround, which could be pretty big. Let's go ahead and talk about some more. So AMC, as you know, it's been down pretty bad over the past year, the past 6 months. Over the past month alone, it's down also 46%. The blue is going to be actually AMC stock, and the yellow is going to be ape. Just kind of like to compare the two. Over the past 5 days, the past week alone, ape has been down 36%. But, it had a huge run up in price, and then it kind of came down almost as expected. But I'm not trying to bring out any bearish information, all that stuff. I'm just trying to show you all the different things that are happening with the stock. But let's go ahead and talk about what I wanted to bring apart. AMC officially hit 100% utilization on February 8th, 2022, and since then, Wall Street has found and shorted an additional 4.45, pretty much 4.46 billion shares. So this is very suspicious, AMC currently does still sit on that utilization rate of 100%, which is very big. We can just see some key things from Ortex. High utilization, cost to borrow is increasing, over the past 7 days. It went from 43.93% to 59%, which is a 35% increase. So we're seeing a lot of stuff. Shares on loan currently is 176.93 million, which is a lot of shares. But for those who might not understand the utilization rate, just to explain it real quick and kind of give you a visual, utilization is the ratio of the number of shares that have been lent out to those that are still available on the securities lending market, given as a percentage. So pretty much, utilization rate is the percentage of shares that can be lent out and how many are being lent out. So I'll show you a visual of that just to give you, this would be a 50% utilization rate, okay? 50% of these shares are currently taken, they are being lent out, and this open 50% means out of all the shares available to lend, there's 50% more that could be lent in this little 50% area. Okay, now right now with AMC, it's got a 100% utilization rate, meaning all the shares available to lend are being lent out right now. And so that is kind of a key indicator of huge demand to borrow these shares, to short whatever it is, to borrow the shares on AMC, which is why we see a 100% utilization rate. And the reason why it can stay at this, there's a ton of factors, but the main one is going to be, people do cover their short positions, and I'm not saying all people have, there's definitely a ton of people with short positions. If there wasn't, we wouldn't have this high short interest. We wouldn't be talking about this stuff right now. But, like every occasionally, maybe there's a retail trader or something who is, for example, shorting 1,000 shares, whatever it is, and then they cover it and it just changes. It's constantly changing. It's kind of the way the markets work. And that is what we're seeing with AMC on this 100% utilization rate. But 4.4 billion shares, 4.46 billion to be exact, billion shares being lent out with 100% utilization rate over the past year is very interesting. So keep that in mind. But I want to show you a little bit more what is going on with AMC. Cineworld shares slip after theater chain denies talks with rival AMC. So as if you don't know, Cineworld has gone bankrupt. I believe they announced in September. They announced that it had not been in discussions with AMC Entertainment over a possible sale of some of its assets, denying earlier media reports. With the company going bankrupt, they wanted to sell their assets so they could pay off their debt. I believe it's like $1 billion that they're trying to pay off right now. In a statement, the Regal owner said that neither it nor its advisors have held talks with AMC. Cineworld added that it is focused on pursuing a buyer that is interested in snapping up the entire group instead of just some of its smaller units, which is what AMC was looking to do. AMC said in December that it held negotiations with some of Cineworld's creditors about a potential strategic acquisition, and some of its theaters in the US and Europe. AMC would have contributed equity in the form of preferred stock while assuming that some of Cineworld's debts. However, AMC claimed that these talks had come to a halt. So it does not seem this is going to continue. Furthermore, I want to talk about what Aron recently just said. He tweeted this on yesterday, on Monday, January 2nd. He will not sell more of the company's stock anytime soon, telling investors, "I ride with you." Here's his exact tweet. Lastly, I've been AMC's CEO for 7 years. About 2/3 of my total pay is in stock, not cash. Well publicized in advance. I sold shares only once in those 7 years, which was between a 65-day span a year ago, and my stock sales ended a year ago. I will not sell anymore anytime soon. I ride with you. That's pretty good stuff that we do like to see. And lastly, what I want to show you on AMC is our real challenge, among others, is the industry-wide domestic box office has dropped from $11.4 billion in 2019 to only $7.4 billion in 2022. So it is more of a macro factor, in their industry rather than a micro and it being AMC alone. They do have the views that it continues to grow. I mean, it's up 64% from 2021, and then they see it growing in 2023 and 2024. There's a lot of talks. I mean, if we can see, experts expect a bounce back in the box office this year, led by top draws such as Creed 3. There's a ton of movies coming out in 2023. We just started the year, and this could be a good start. The good news is for 2023 that there are more movies more often, not just a few really good movies. There's going to be more movies more often. Consistency is a very big thing. Comscore senior media analyst said on Yahoo Finance Live, that's where he said this on this video. But to close it off, some of you misguidedly protest against dilution. Aron added in his latest tweet storm. When industry demand is off a whopping 35%, companies that do not raise fresh capital run out of cash and go broke. Cineworld Regal in bankruptcy court right now, not us. We know what we are doing, looking out for your interests. So what he's saying is, the movie theater industry, I'm not saying it's dying, but the numbers show that it's getting smaller and smaller, and it could continue to grow. I mean, it had grown from 2021 to 2022. COVID did make a massive dent in this industry, but we're seeing more movies coming out, people going back to theaters and different things like that. So this could be very big. We do just want to see that growth, and he's saying in order for us to be able to maintain in these downtimes, dilution was almost a necessity, but I don't know if I'm necessarily a huge fan of being diluted in the same amount. They raise money from ape and a ton of different things. They're paying off debt. They do seem to be getting themselves in a more solid situation. But that is going to wrap it up for this video. If you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you again for making it to the end of this one. Check out the links down below for some free stocks and free money. And I will see you at the next video.